I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast where we will help you learn to invest in 20 minutes or less. We break down the world of investing from beginning to dividend so that you can hopefully make some returns. My name's Bryce, and unfortunately today we are not joined by my equity buddy Ren. He was unable to make it for this interview, but alas, the show must go on. So today I am excited to introduce you to another expert investor interview in our series. Canna Campbell is the guest on the show today. She is otherwise known as SugarMumma and the creator and founder of the $1,000 Project, all of which we will delve into in this episode. Now, I know there are some listeners out there who would be very excited for us to have Canna on the show, and if you have never heard of her before, then this is a great opportunity for you to get to understand what she is all about. She has some fantastic messages about personal finance and investing, a really interesting story, and a very worthwhile project that anyone out there can give a crack. So without further ado, here is our interview with Canna Campbell. Welcome to Equity Mates Investing Podcast. Thank you so much for joining us today. Appreciate your time for coming on.
My pleasure.
To give our listeners an idea of your style of investing, I just wanted to play a quick overrated or underrated game against various different types of assets to see what you thought about them. So overrated or underrated the Australian property?
Overrated.
Okay. What about overrated, underrated government bonds?
Oh, can I be neutral?
For the purpose of the game, no.
Oh, it's a no. Okay. Overrated.
Okay. What about overrated, underrated US market?
Underrated.
Corporate bonds?
Underrated.
What about overrated, underrated margin loans?
Underrated.
And the ASX 200?
Underrated.
Cash and term deposits?
Oh, underrated.
Okay, interesting. So a bit of a preference there for equities, obviously, which is what we would expect, and we'll get into that a bit later on. So, I guess a bit about your background, Canna. I came across you with the $1,000 Project, which we'll get to a bit later, but I wanted to go back a bit. You're a financial advisor, so how and when did you decide that that was sort of the path that you wanted to take?
At a really young age, my father got me into investing when I was in, I think, my first year of university, and I absolutely loved it. Getting my first dividend check in the mail, not even knowing what a dividend check was at the time, it was the biggest trigger for me to decide, okay, this is amazing. I need to show other people what this is all about and how they can create this for themselves.
Yeah, I remember my first dividend as well and was blown away by the fact that we were getting free money from doing nothing. So it was fantastic.
It's incredible. It's the best. Even, I still get excited when I see, dividends coming in. It's just, it's all signs you're heading on the right path, and it's all paying off.
So what was that first investment that resulted in giving you the dividend, and did you decide personally to invest in it, or how did you decide?
No, I was sort of fresh out of school, and my father was organised and put it in with me. It was a investment into a property trust, so I was getting quarterly sort of dividend payments.
Yeah, right.
It was like an industrial property trust. Okay.
And is that sort of still something, not that particular company, but that style of investment, something that you still invest in today?
I don't. I'm much more, it's funny, like, when you first start investing, you kind of go with what the person you trust the most says. And I've since, over time, as I've become more educated and I'm a qualified financial planner and have been doing this for so many years, I am actually very much more based around industrial stocks. So, my father's taught me how to invest, but I've developed and designed my own style and very much buy and hold. But, blue chip Australian industrial stocks is what I prefer the most, and reinvest dividends as much as possible.
What was one of the biggest lessons that you've learnt about money growing up in your 20s and making that first investment at uni and then, looking back on it, what's one of the biggest things you've learnt?
I think looking back is the impact of small habits. Being mindful with money as early as possible has a huge impact on making your life as easy as possible going into the future. My first job out of university, my base salary was my entire package actually was $30,000 a year. But I had really healthy habits. I didn't spend what I didn't earn. I had a great balance. Yes, I did allow myself to buy a new dress for that weekend, but I also made sure I did that after saving, a certain percentage of my salary. And my father, if he ever saw me with a shopping bag, he'd be like, hang on, have you got money in your savings account? Have you invested some more money? And I always was able to answer that. Yes, it's okay. I've done those things. I've honored those priorities first. And it's the smallest things really do add up. And when you're really passionate and connected to a goal and you just go for it, it's amazing what you can achieve.
Yeah, I totally agree that having those habits in place is incredibly important, especially when it comes to having money available to invest. What sort of gave you the ability or empowered you to actually develop those habits in the first place? How did you do that?
Well, I think it was almost a little bit spiritual in one sense. I look at people around me the impact of financial stress in their lives, and whether it causes problems in relationships, whether it causes problems in careers, families, health, and that's what was such a driving force internally for me, because it's one area of our lives where we actually have a lot more control than we realize. So that was probably my number one driving force, and that is still what it is today.
So I guess broadly speaking then, why do you invest? What's the driver for that?
Is to have the freedom. To me, freedom is a huge luxury. I'm really passionate about my job. I absolutely love it. I've been doing it for, I think, 17 years or something like that. And it's having that passive income coming in through my diversified share portfolio and my investment portfolio is so rewarding, knowing that I'm never trapped into a situation that I have to accept. I'm free to move, I'm free to change jobs, I'm free to live in another place, I'm free to give money to charity without any restrictions, I'm free to help friends out without it impacting me. That is incredibly empowering, and that's what keeps me going and is what I focus on.
No, I completely agree. It's a message that we try and get across on our show as well, is the power of setting yourself up now for 20 or 30 years down the track, so that you can enjoy, I guess, not being the slave to the corporate world and living paycheck to paycheck. And investing is certainly a fantastic way of doing that.
Exactly. And by no means am I telling people to quit their jobs. Even when I've achieved my goal, I will still get up and go do the same thing every day because I love what I do. But that comfort at night, knowing I'm building something that's actually going to exceed what I earn, helps you sleep well at night.
So on that, what's your thoughts on the whole FIRE movement at the moment? That financial independence and retire early lifestyle that I think they're encouraging. Do you agree with that, or what's your sort of take on it?
Look, it's so individual. We now are working in a day where you don't have the same job for the rest of your life. You can evolve, you can reinvent yourself, and if you're able to set yourself up by doing all the right things early in life, that's fantastic. I'm not opinionated on anything. I respect everyone's individual dreams and goals.
Fair enough. You are a financial advisor. Been doing it for 17 years or now or so.
Yeah, financial planner. Yeah,
financial planner. Yeah, but I guess you're more famous for being known as SugarMumma, and your 110,000 odd subscribers on YouTube who watch your videos on all things sort of personal finance and investing. So that brings us to the $1,000 project. Now, I'm sure there are a number of listeners out there I know who are aware of the $1,000 project, but for those of them who aren't, can you give us an insight into what the $1,000 project is and why you started it?
Okay. $1,000 project is it's like my personal, precious baby. It's where I took one really big goal and just broke it down into bite-sized, mini manageable and therefore achievable goals. And that was just to come up with $1,000 at a time. I could have said to myself, okay, say $40,000 in the next 12 months. I would have completely freaked myself out, overwhelmed myself and probably just given up and procrastinated. But I said to myself, well, hang on, why don't I just think about $1,000? $1,000 is a lot of money to me, but it's not incomprehensible. I can find a way of coming up with $1,000. So that's exactly what I did. So I wanted to, and I already had my YouTube channel, it was growing. I wanted to be able to create a fun challenge where people could join in with me, but I could prove people what I'm talking about, because I can bang on about it and tell everyone, watch your pennies and the pounds looking after themselves and you need to invest in shares. But unless I'm actually showing people that I'm doing it myself and they can see the benefits, I'm not going to have that great impact on people. So what I did was I created some rules. And I was like, I can't take any money out of my salary. I can't take any money out of my savings. I have to get out and hustle. I've got to find ways to create this to show people that you're not limited by your current situation. You're not limited by what you earn. You're just limited by your mindset. And if you can change that, the sky's the limit. So I literally, the moment I decided, I got straight into it straight away. I started selling things on Gumtree and eBay. I created like fun financial challenges like Frugal February and Manifesting March. I did market research. I rented my house out on Airbnb when I was away on holiday anyway. I did so many weird and wonderful things. It really was incredible. And every time I came up with $1,000, I put it on my website. This is how I did it. And so I could share with everyone what I was doing. And by the first 12 months, I did $32,000. And every time I had $1,000, I went and invested it into Australian blue chip shares. So people could see that I'm actually not saving all this money to go and blow it. I'm saving it to build for my financial future and security.
I mean, it sounds like quite an adventure, to be honest. You would have done some pretty cool stuff.
Yeah.
What was, I guess, one of the most enjoyable or memorable thousands that you saved that you sort of finished and you're like, man, that was a cool way to do that?
I think decluttering my home, the $1,000 project really aligned to my growing love of minimalism in my life. I decluttered my house and I freed up so much space, and it made it so much easier to take care of and maintain and keep clean. And we are just drowning in stuff that we've been told we need to buy and have, but don't really use it. And my mantra is only buy what you love, value, use, and appreciate. So I was able, it was cathartic, and it was just liberating as well. That was one of my most satisfying ways of making some quick cash.
And what was perhaps one of the 1,000 that took the longest? Because I'm imagining this wasn't sort of like 1,000 every 2 weeks, or
no.
It would have taken a lot longer. What was the real slug?
Oh, there were ones where I'd have like months where my energy levels were really flat, and things would just, like for example, I'd take on extra freelancing work to do on the weekends, and I had a couple of situations where people took 3 or 4 months to finally pay me. That was a bit of a kick in the guts, because I'd given up my weekends. I'd done all the job, finished it off, done it exactly as they requested, but then they didn't honor, they were slow to pay. And, I had to be patient and kind and professional, but then also, I was like, I'm doing a $1,000 project. I need to keep going, So it's an emotional journey. It's an adventure. But every $1,000 is so exciting, and you feel like you're just breaking through any self-imposed, self-limiting beliefs that you've ever, put on yourself. You just smash them away, and it's so inspiring. And the people, it's actually taken a life of its own on social media over the last couple of months, where people now text me their pictures of what they're doing. They text me their pictures of their eBay items or their Gumtree items, and they text me pictures of them reading their book on the beach, and then other people are doing the same. And I'm like, it's just like, it's become insane. I probably get like 5 pictures a day now from around the world as well. It's not just Australia, it's Venezuela, Chile, England, Singapore, Belgium. It's just mind-blowing. And they're doing the €1,000 project or the £1,000 project, and the thing is, the $1,000 project it was my $1,000 project, but it can be your $100 project. And I do hope that I'm going to be able to turn the $1,000 project into a program for children as well, to teach children about money mindfulness and the importance of giving and the importance of investing, because all that passive income I make, I give to charity.
I guess just touching on a point you made there, so the $1,000 project's a great example of the message that we sort of try to get across, which is, the importance of saving to invest and not necessarily saving to save. And I think many people say that they can't invest because they don't necessarily have money to, which I think is a bit of a myth. But
yes, huge.
So for some people, saving $1,000 might be quite difficult, as you said, and it is a lot of money. So I guess what advice and tips do you have for people who say might be in that position and looking to still achieve the same sorts of results? Do you have sort of what good habits can people put in place to invest regularly?
Of course. Well, look, just on a personal note with the $1,000 project, when I started this project, I had just gone through the end of a very painful, toxic and expensive divorce, and I had no money to invest myself. I was on such a tight budget to keep my own head above water and take care of my son. So even if I wanted to have taken money out of my own salary or savings, that was not possible. So first of all, I had to adjust my mindset because there's no point going to something like this if you don't really believe in yourself. So, and that's why I just focus on the little things that you can do. So I just focused on the $1,000 that I could do. I also sat down and I went through my budget. Little things like I had Foxtel, and I don't even watch television, so that immediately went. I learned to take my lunch to work all the time, which then actually also had fantastic health benefits as well. I learned, things like meal planning and food prepping to save money and reduce wastage. Like all these little things, like look at the way that you spend money. Also doing things like paying for things in cash because you're so much more present when you hand that $50 note over. I know I hate breaking notes, and I have embraced the cashless society, but doing that cash exercise for such a long period of time, I'm so respectful of watching my account balance drop if I'm going to be swiping and tapping. And then also look at ways of, look at the ways you can save with your existing lifestyle, but then also look at ways you can earn extra money, because it's the two different sort of parallel worlds of saving and earning more. That's how you break, your financial circumstances and raise your bar. So, I enrolled in market research. I tested biscuits to washing powders to washing machines, like all sorts of different things. And, people thought I was completely nuts. And I was to a certain degree, but I was really passionate and determined to make this happen. And it was completely worth it. And so, what can you do? Can you walk dogs? Can you do some babysitting work? Can you do tuition? I had this one girl who was brilliant. She was actually a personal trainer, but she was also really good at carpentry. So she started to make life-size Jenga blocks, which she not only sells on Gumtree, but she also rents out to events and is doing really well. So, start doing things, thinking about ways you can earn extra money. Like, can you do cooking lessons? Can you cook people's meals to help them out? Can you, do some nannying? What are the things you can do to help bring in some extra money? And these things really do make a huge difference.
After all of that, you saved $32,000, was it? $32,000 in 12 months.
Yes. And then I did it all over again. The $1,000 project isn't just a stagnant thing. It's something that's evolving and growing. It was round 2 was $36,000 in 13 months.
Okay.
Round 3 is just about to finish at the end of round 3 ends at the beginning of March.
Okay. And how are you going so far?
I'm actually behind.
Okay.
And there's a very good reason why I'm behind, which hopefully I can share with my followers soon.
Okay.
But this is the beauty of the $1,000 project, is it evolves with you and your lifestyle.
There we go. Stay tuned. So let's talk about a bit more of the nitty gritty of the investing, because, you're saving $1,000 at a time, and you said that you were looking at industrial stocks. Now, what was your rhythm for investing that $1,000? I guess, as soon as you saved it, did you invest it straight away, or did you think about the timing that you were going to enter the market? Did you invest, save the $1,000 chunks into a $5,000 lot and invest at once? How did you approach that side of the investing?
So the moment I had my $1,000, I invested it straight away. But in the lead up in saving that $1,000, I would research and look at my portfolio and think about what's the next stock I want to add to the portfolio. What areas do I need to diversify into? What am I seeing value at the moment? What are the estimated dividend yields on this and that? So whilst I was saving and hustling, I was also researching. And there were occasions where I was, I got paid, say, or earned or saved, say, $2,000. Like I would put my tax refund in, for example. So I had, say, $2,000 to invest. I would invest it in one hit of $2,000 worth of stock. But I wanted, if I said to myself, oh, I'm going to wait and do it in chunks of 5,000, I was worried about losing momentum, because I know for a lot of people when they go and buy shares, particularly when they're new to it, it's so liberating, it's so exciting. I wanted to keep that excitement and passion and adrenaline going, because that would then fuel me to get started and cracking on my next $1,000.
So you've essentially averaged your way into the market. So
yeah.
Let's talk about your research then. So I guess one of the more daunting aspects for a beginner investor is actually knowing what to buy. You mentioned that you invested in industrial stocks. So can you explain to us why you chose those particular stocks as your focus?
Sure. I'm a huge fan of Peter Thornhill, who wrote the book Motivated Money. And if you look at the long-term returns paid by industrial stocks versus resources, the value, the growth is exponentially different between the two. Industrial shares have a growing dividend at a much more consistent and faster rate than resources stocks. I also have been passionate about stocks because you don't have the same holding costs and buying costs that you do with property. But I love, most importantly, is the franking credits that you get as well, because as my situation changes and my income changes, those franking credits can be incredibly valuable as well.
Yeah, so that's something that for the beginner investors that are listening to us now, that's something that we cover in our dividend episode. So don't panic if you're unsure what we're talking about in terms of franking credits. But can you just differentiate for us the difference between an industrial stock and a commodity stock, for example?
Of course. So an industrial stock is a company that produces goods and services. Resources stocks is normally companies that take stuff out of the earth, so gold or coal or gas. So, very different business operations. Resource companies are very expensive to set up and to maintain. With industrial stocks, it's goods and services, companies that you deal with every day. So like the Woolworths, the Qantases, going to your Coles, Telstra, like the companies that we use every day, we rely on just to function.
And importantly, you chose these because you were looking for an income stream, really.
Mm-hmm.
And
yes.
That's probably one of the benefits, I guess, of investing in equities is, as you said right at the start, is, getting that dividend check. So does that mean that over the year you had a selection of stocks that you were averaging into, mm-hmm. and now that's generating an income stream for you?
Yes. So if you check out my website, you'll see in my latest blog post, I have a passive income stream of about $4,465 per year, I believe.
And that comes in 2 installments a year, right?
Yes. I actually reinvest, though, all my dividends.
Okay, that was going to be my next question.
Yes.
And why is that? So I guess for those listening, reinvesting, so Canna decides not to take the cash, and you essentially say to the companies, no, I want you to put that cash back into the stocks and buy more stocks, essentially. So why do you do that?
Well, it adds to obviously the compounding effect, in the wealth creation. And the other benefits are I save on brokerage every time I do that. I don't pay $20 or $18 or $17 in brokerage. It goes straight back in. Some companies even offer dividend reinvestment at a small discount. It also helps average out my entry price because it's reinvesting with the market share price moving. And essentially, which is probably the biggest thing of all, is I'm buying more passive income streams. I can comfortably live on my salary. I don't need that. So why don't I let it grow and build over the long run and give it the biggest and best opportunity possible and let it go? And to be honest, if I was to take some of those dividends, it's not going to add that much value into my life. But I know by reinvesting, it's going to add huge value in my long-term life.
Absolutely. So how often are you reviewing your portfolio? I imagine that, well, correct me if I'm wrong, but that the stocks that you probably chose 3 years ago or in round one are not necessarily the exact same stocks that you would be putting in now. Is that the case? Are you reviewing?
No, not at all. I'm still buying pretty much the same stocks. I've added more listed investment companies to help, reduce the risk and smooth out the volatility. So we have, the companies like Whitefield and Milton in there. But we also I've included some international ETFs and a geared ETF as well.
Long or short?
Long.
What is your time horizon? Do you have one in mind that you're sort of aiming to...
to exit and run away?
Yeah, run
no,
to the
never.
islands.
I get asked this question all the time, like, when are you going to sell the whole portfolio down and what are you going to do with the money? I'm like, don't be stupid. Why would I ever cut off my passive income stream? This is I've only touched the surface. This is going to be bigger and better, and I'm hoping it will become, a fairly important movement where this money continues to go to charity year after year, and it's not a $5,000 donation, it's a $50,000 donation, and next year it's a $55,000 donation, and the next year, as it continues to grow, all to go to charity. I have no intention to sell down the portfolio. Why would I want to? I'm going to pay a whole pile of capital gains tax, obviously depending if Labor keep the 50% CGT discount in place, and obviously the franking credits, but it's why would I do that? And then I put it in cash, and then inflation and tax kicks in, and eventually I watch all that money that I've hustled and saved slowly erode away. Whereas if what I ultimately want to do is have that portfolio generating so much passive income that it more than covers the average Australian's cost of living.
So are you only investing what you make through the $1,000 project, or are you now supplementing these investments with your income as well?
No, the $1,000 project is completely separate to my own personal share portfolio. And it's funny.
Gotcha. People
ask me questions, and I'm so removed from it, I actually don't look at it as my money my investment portfolio. It's so not emotional, and it's literally like I'm managing my son's piggy bank money. It's not mine. It's because I'm using it to prove a point, to inspire people, to motivate people to get off their backsides and do something, change their future, see how powerful they really are.
I think that's one of the most important lessons that I personally have learned over the sort of last 2 or 3 years doing the podcast as well, is the ability to remove your emotions from your investing decisions, because the long-term implications of getting your emotions involved can be quite disastrous to the performance of your portfolio. And I guess if you feel like you're removed from this and literally just following a process rather than a process that's impacted by your emotions, then they also, consistency and following a process is probably in itself a really good investing strategy.
And also look for opportunities. The portfolio for a while there was actually worth quite a bit more than what I had invested there. The cost price versus the market value was quite substantial, and not once did I ever publicize that, because I didn't want people to think this is about making a quick dollar or making lots of money, and it would then become emotional. So the portfolio is probably reasonably close to the cost of of what I've invested, give or take a couple of $1,000s. But at the end, I get it. This is actually exciting because these are now opportunities. I'm picking up ANZ at a bigger discount than what I have bought it in the past. This is great. Give me more. I'll use this, and it's still got a great yield on it. And obviously, general disclaimers, I'm not recommending ANZ to people, but I'm just saying that was my emotions. It's exciting. It's opportunity.
No, I agree. What's one of the biggest myths of investing that you think is out there at the moment?
That you can't. Oh, well, can I give you two?
Absolutely.
One is that you can't afford to invest. That's just rubbish. I cannot tell you what I went through when I was going through when I first started up the $1,000 project. Everyone thought I would. I fought so hard to put my son first, and it cost a huge amount, and I just did it because I just was so adamant. And I didn't. There were moments where I thought, oh my God, I'm going to fall spectacularly, but I didn't. You've just got to get on and come up with ideas and just shut up and do something about it. Don't wallow, don't feel pity. Just try your best, and every little step counts and is a step in the right direction. And the second thing that I think is the biggest myth is that you should do this when you're older. Investing is for wealthy people only. Rubbish. I have seen young girls who have come to me with substantial share portfolios that they have established a couple of years ago, and they have got the most exciting future ahead of them. There is a growing trend of young people building shares, actually saying no to property, interestingly, which is great for the right people, and they are kicking butt and they're achieving their goals, and it's only going to get easier. So this idea that stocks and bonds and shares are for wealthy old men, that's ridiculous. That couldn't be further from the truth.
Completely agree with both of those. Yeah, two messages that we also try and get across in our show. So glad we see eye to eye on that. Canna, let's wrap up and finish with our final three questions that we always ask our guests when they come on the show. So we'll kick it off with the first one, which is, what are your must-read books, investing or otherwise related?
There are 4 books that I want to mention. One is Motivated Money by Peter Thornhill. So for anyone interested in investing in shares, this is, and I don't know if you've read this book or come across this book yourself, but Peter Thornhill is a brilliant public speaker. I've known him probably for 12, 13, 14 years, and he is an experienced investor, self-made multimillionaire. He comes from a fund manager background, and it's a huge eye-opener book where he compares term deposits, compares property, talks about the media and how they can cloud our judgment and the emotions behind investing. Definitely my number one pick. Another great one for money mindset is Think and Grow Rich by Napoleon Hill. It's a hard book to read, but if you can get there are crib versions, which make it a lot easier to get the key points. I highly recommend that, because if you don't have the right mindset, you're setting yourself up for a really tough time and a miserable time as well, because this should be a fun, empowering experience. Next one is Ordinary People, Extraordinary Wealth. Simple, basic saving habits over a long run, and where people end up financially is huge. And nothing is what you think it is. People might look like they're incredibly wealthy, but it's, a stack of cards. They've got things financed, there's huge loans, there's credit card debts, so that's a brilliant book as well. And then the last one is actually more of a life balance, and it's called Harmonic Wealth. It's hard to find, I believe, so I don't lend my copy out to anyone, but it talks about the pillars of wealth, and it's not just financial wealth, it's intellectual wealth, spiritual wealth, relationship wealth, physical health, wealth. It really is an incredible book, and it has had a huge impact in my life and the way that I built my business.
Yeah, nice. Some great recommendations there. We'll put them all in our show notes for our listeners. So where do you then go to find your investing information?
Well, I use sounding like I'm recommending ANZ. I'm not at all. I use the ANZ platform for both my personal share portfolio and for the $1,000 share portfolio. There's a lot of free research on that. It's a little bit limited. Also, I subscribe to Morningstar as well, but I read the paper. I pick bits up from there, snippets of advice. There's some pretty good tips in the paper. It's not hard to find. And then also, I use my intuition. If I am in a supermarket and I see they've got this new range out of doing something quite different with their products and services, and I think, wow, that's quite clever, that will inspire me to go and have a look at what's going on with that company, what's it trading at, what's it been paying dividend yields, who's managing it, what are the new things they're working on. I look around me all the time.
Yeah, no, we just did an episode recently on how to find inspiration if you're a beginner, and that's one of the biggest messages that we touched on, is using your environment as a trigger point to look for companies that you probably actually know more about than you think you do, just by virtue of using them and interacting them with their product on a daily basis. So yeah, completely agree.
Yeah, it's amazing.
And the final one, Canna, is if you had to tell your 20-year-old self one thing, what would that be?
It would be to start building passive income earlier. If the goal and dream of owning your own home is a great one to have and should never be necessarily put off, but don't you can put building passive income streams up as a priority. And if I could go back in time, I probably would have just focused on building passive income streams as soon as I started in my 18, rather than jumping on the bandwagon of having to own my own home.
Thank you so much for joining us, Canna. It was inspiring talking to you about the project. We certainly, your messages resonate with the way that we sort of think as well. And I know that a lot of our listeners would have got a lot out of that. If they want to find more out about yourself and the $1,000 project, where can they do that?
Well, you can buy the $1,000 Project book on, I think, Amazon or good bookstores. It's also available in Audible. And then there's my website, SugarMumma.tv, and my YouTuber's channel as well. Everything I provide is free, and I'm not trying to sell you products or anything like that. It's pure financial education and inspiration.
No, it's great. I was having a look at your channel, and there's some awesome stuff on there, backed by 110,000 followers. So it's certainly getting a good following. Again, appreciate your time, and thank you for sharing your story and some really cool tips with us. Appreciate it.
Well, thank you for allowing me to share, and hopefully, your listeners find this helpful and can continue to make changes in their own life as they grow their own financial education and awareness.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.